Hi friends, this is Suresh. Welcome to my Lakshmi Securities YouTube channel. Today we are going to see one of the best stock in the market which will give very good return very soon. Keep watching this video till the end. Before looking into this stock, please go through the disclaimers. Okay, the best stock is Tata Steel. Tata Steel is one of the leading steel manufacturing company in India. It manufactures all the steel components for all the sectors like construction, transport and etc. Now the point here is how can we say this stock is good for investment right now? To get more detail about this stock, we are going to see all the fundamental and technical aspects of this stock one by one. Let's start from fundamental aspects. In fundamental analysis, we are going to see following the parameters which will affect the stock significantly. Here I mentioned that the expectation level for each parameters. It could be considered good for this stock. Out of 14 parameters, the stock need to meet maximum number of requirements which will fine tune our analysis. Okay, let's start. First, market capitalization. The stock market capitalization is 1,41,000 crore. So it is one of the large cap company. I am always prefer large cap company for investment purpose because they are playing significant role in the market. Second, net income of the company. In the year of 2022, the income was 2,44,000 crore. But previous year, I mean in the year of 2021, the income was 1,56,000 crore, which means the income is drastically increased. So we come to know that the income is keep on increasing. It is good. Third, profit and loss for the period. If you look at the company P&L, 41,000 crore in the year of 2022, but previous year 7,800 crore. So the P&L also keep on increasing. It is also good for the stock. For the current ratio, the current ratio for the company is 1.02, which means the company has the asset 1.02 times higher than the liability. Our expectation level is 1.222. So it is not meeting our requirement anyhow. It is not a significant difference. So we come to know that the company has sufficient financial background. Fifth, quick ratio. The quick ratio for the company is 0.48, which means the company did not having the sufficient fund for short-term investment and other expenses. Our expectation level is more than 1. Sixth, debt to equity ratio. For any company, the debt to equity ratio should be less than 1. In this company, the debt to equity ratio is 0.6. So they have very less debt. Seventh, return on equity. The return on equity for the company is 35.08% as against the expectation of 15 to 20%. We can understand that the company has earned good revenue through investment. It is also good for the stock. Eighth, return on asset. In this company, the return on asset is 14.06%. Our expectation is it should be more than 5%, which means the company earning good revenue by using their asset. It is also meeting our requirement. Ninth, price to earning ratio. The PE ratio for the company is 4.94. Our expectation is that the PE ratio should be more than the industry PE. Here the industry PE is 5.94. So it is less than the industry PE, but it is not significant difference. 10th, price to sales ratio. In this company, the price to sales ratio is 0.65, but our expectation of the price to sales ratio is less than 2, which means the company is growing according to the sales of the company. It is very good for the company. 11th, price to book ratio. In this company, the price to book ratio is 1.39 as against the expectation of 123. It is also meeting our requirement. 12th, dividend yield. The company dividend yield is 4.41. Here our expectation is the dividend yield should be more than 1. So we come to know the company has giving very good dividend to investors. That is EBITDA. The EBITDA for the company is 26.34. The company income is keep on increasing before tax. 14th, management holding and pledging. The management hold 34.29% of the shares in the company and keep on increasing their holdings also. And also the company recent pledge is 1.15 and it is also coming down year on year. It is also good for this stock. In this data, only two parameters did not meeting our requirement, but it is not significant variation. So we can understand that the strong, very strong in fundamental aspects. Next we will see this technical aspects. In technical analysis, we are going to see the entry and exit level of the stock as well as the targets. I am always using MACD and RSI indicator for technical analysis. So the current market price of the company is 115. The RSI value is 58. So we come to know that the stock is not in overbought zone and MACD shows positive signal. So the conclusion is that this is the right time for entry and you can follow the pivot levels for the targets. As of now, we have seen all the fundamental and technical aspects of this data. Still, based on my experience, I performed this analysis. So before investing in this stock, please discuss with your financial advisor to get more confidence. We always remember the rule of Warren Buffett. Rule number one, don't lose money. And rule number two, don't forget rule number one. Keep in mind before investing in the stock market. Learn more, gain more. Thank you.